Insurance is a necessary evil if you own a home in pretty much any state and any city in the US, but especially here in California with earthquakes and unfortunately the growing concern about fires. Now, in addition to that, you need to be smart about picking the right insurance policies for your homes to give you the appropriate coverage. So I'm going to discuss a little bit about what you should be considering when you are trying to buy insurance for your home. It's a lot like looking for car insurance. There's a lot of risk that you're trying to mitigate and you're trying to understand your situation. But here's 5 factors you should consider. Number 1, your credit score. It does matter. So having at least 660, 680 or better will absolutely help you in the long run. Number 2, the location. I mentioned before, earthquakes and fires are a real thing here in California. And based on whether you're moving into an area that is on a fault line or has had a propensity for fire issues, some insurance companies are no longer insuring in those areas. See State Farm, which recently left the state of California, so to speak. And others are going to charge you through the nose because it is a high probability that it'll catch on fire or an earthquake will happen. So you just have to do your research ahead of time. Number 3, have there been previous claims on the house? You want to keep that in mind. Previous owners may have had a bunch of issues in the past, and those have been recorded against the house with certain insurance companies. They can look that up. So again, you want to do your homework, and you also, if you've used this insurance company for homeowner insurance, don't want to be putting in a lot of claims. It can go against you as well. Number 4, you want to consider the size and the condition of the house. The type of insurance policy you get in your premiums will be very different if it's a brand new house that is up to code, is in the year 2023 versus a house that you bought that is from the 1920s. Plus its size. Size matters in a case like this. A bigger house will be much more expensive to insure, as well as an older house. And then lastly, you want to consider level of coverage. As I talked about before, there are things like replacement costs or the assessed value. You really want to dive into some of the details there, particularly if something happens that is out of your control, like a fire burning down the place or an earthquake damaging the property, and you want to rebuild. You want to know what those policies and the coverage is, and if they are able to just cut you a check to pay for what it'll look like in 2023 or 2024 to build it from scratch, which is replacement costs. There's a lot of details there to consider, but make sure to reach out to other insurance companies, shop around, tell them about your situation, tell them about the house and the neighborhood you're trying to live in, and weigh your options, think through the prices. Not everything that's cheap is the best fit.